Okay, Sarah.
All right. Good afternoon, everyone. We've got people coming in and getting settled. We'd like to welcome you to today's webinar, which is potential changes to federal grant rules, what nonprofit leaders need to know. And my name is Sarah Bohm, and I'm a senior manager at Han Group, and I'm happy to be representing the client accounting and advisory side of Han Group today. But we are so pleased to have you join us, and we're going to be discussing potential changes to federal grant rules and what those changes can mean for nonprofit organizations. We are joined today by two members of Han Group who bring their considerable experience in working with nonprofit organizations. First, we have Lisa Lipsky, CPA and senior partner at Han Group. Lisa has nearly 30 years of experience serving nonprofit organizations with expertise in audit and assurance, financial reporting, and single audit compliance. She has extensive experience working with social service organizations, foundations, religious organizations, and higher ed institutions. We are also joined by David Nazari, CPA and partner at Han Group. David has more than 12 years of public accounting experience, specializing in financial statement audits, uniform guidance compliance, and nonprofit financial reporting. He works with charitable organizations and other tax-exempt entities on regulatory compliance, internal controls, and governance. And before we get started, we are going to do a little bit of housekeeping.
Joyce
Um,
actually
if,
set up the
if
Zoom
you're joining us, if you could
password,
please
but
mute
you have
your
any idea what the
microphone.
password is?
Okay. So today, if you're joining us for CPE credit, you will need to answer 3 polling questions that will mark your attendance. You don't have to get these correct, but you do have to participate and answer the polling questions to get your CPE certificate. If you have any questions, which we welcome, please add them to the chat, and then when we will address them when we have a break. And I think when you're finished with the session today, please leave your browser open for a survey. That's also required to get your CPA credit. So with that, we will turn over to Lisa and David to get us going. Thank you so
Great.
much.
Thanks, Sarah. We appreciate you. So, we're going to be talking mainly about the 2026 proposed changes to uniform guidance. And I think many of us were somewhat surprised that there was another revision. Typically, they occur I would say every 5 years. And given that we just had an update 2024 in October, I don't think many of us were expecting this revision for 2026. So going back to January in 2025, the administration had had said that they would be making additional changes to uniform guidance as part of the new review process, therefore prompting this 2026 revision. I would say overall, the goal is for this 2 CFR. Again, this is where uniform guidance is housed. They're my favorite digits, 2 CFR. And it's really the reason for this is to improve transparency, accountability, oversight. Also, to clarify the status of various OMB policies and to reduce some to recipient burden. I will also want to punctuate that when we first saw the proposed revisions, it had an effective date of 10/26. I will say, from what I'm hearing through the grapevine, that may not happen, that it's probably looking more like December 2026. So again, this is somewhat fluid, and we're just encouraging everyone to get comfortable with these changes and to monitor accordingly. So with that, I'll turn it over to David.
Thanks everyone for spending a part of your day with us. So today's learning objectives, we're going to identify some changes in the proposal that we think are most significant. We're going to talk about how recipients and subrecipients can prepare for those changes. And then at the end of the presentation, we're going to talk about some best practices to get you prepared for your single audit. So for those of you who don't do this every day like we do, I think it's always important to revisit some of the terminology. So in the world of federal grants, you're going to hear two terms quite often, 2 CFR 200, which is also known as uniform guidance. And that's kind of the rules around federal grants. So what that does is it addresses internal controls, cost principles, administrative requirements, and single audit requirements. And then you're also going to hear the term the compliance supplement. And the compliance supplement actually sits within 2 CFR 200 as an appendix. And what that is, I think of that as the single audit playbook. So what it does, it addresses which compliance areas are subject to audit, and then it also tells you how to audit those. So that's actually updated annually. So more recently, with all the COVID grants, one of the following compliance updates, they included those COVID grants, told you how to audit them, told you what compliance areas were relevant. 2 CFR 200, as Lisa mentioned, that's not, sorry, we did get some feedback if you could mute. 2 CFR 200, that's less frequently updated. And we did have a question in advance. Why, if we just had a revision in 2024, why are we having a revision in 2026? And I think Lisa alluded to this. It's kind of surprising to everybody. But in 2024, that was more of a regular administrative update. So the key revisions there were it increased the single audit threshold. It also increased the de minimis rate for indirect costs. This new revision, it's a little bit different because it's focusing on oversight, it's focusing on transparency, and it's also adding a discretionary element to federal grants. So we do want to emphasize that this is still proposed changes, they're not final, but we did want to just kind of quickly go over the timeline. So the proposal was published in May of 2026. After that, they opened it up for public comment through July 13th. And we're currently in OMB's review process. So they're kind of intaking the public comments and then coming up with final revisions. Lisa mentioned it was initially expected to go into effect October 1st. Nothing's ever guaranteed with the federal government, but we're thinking maybe December is what we're hearing. And we did have one question. Lisa, maybe you can cover this. One of the attendees did ask, when the revisions are final and go into effect, is there going to be any retroactive applications to the revisions?
Yeah, excellent question, and we appreciate that. So, no, this would not be retroactively applied or implemented. Similar to 2024, it's a move forward. It's for any new grants and contracts or new amendments. So we can't go backwards. It's a forward regulation that would only be applied to those new grants and contracts.
Thanks, Lisa. So this proposal is a little unique. So historically, when we're looking at proposals, we're looking at kind of administrative requirements, changes to the single audit and compliance testing. This is definitely forward-looking with the transparency and oversight. I think one of the key things that stands out to me is that they're adding a little bit of subjectivity to federal awards by adding a discretionary element. So now more than ever, your concentration in federal grants is going to be something that you want to monitor because they will have some ability to take away those grants, which we'll cover. So historically, federal awards have really been a pretty stable source of income. Unless your organization was non-compliant or had some performance matters, you're pretty much, that was a stable source of revenue throughout the life of your grant. Now, more recently, we saw some pretty major disruptions with cancellations and, even agencies closing down. And these new provisions kind of are leading to having that discretionary ability where if agency priorities change or federal interests change, there's going to be some uncertainty around those grants. They're going to have the ability to cancel grants. So now like I mentioned, funding concentration is going to be very important, but also not only concentration of federal grants, but within your federal grants, do you have concentration to one agency or multiple agencies? So if you have one, you could have the same nonprofit with the same federal award concentration, but one has all their awards with one agency and one is spread out. Well, the one with one agency is going to be a lot more risky, because if that agency changes its priorities, they could subject to change the awards. So you're looking at concentration and diversity in two factors: federal grants versus non-federal grants, as well as within your federal grants amongst agencies.
And Dave, I would like to add to that, since this is changing and it's a big pivot, I would say, going from uniform guidance to a regulation, a government-wide regulation. And I think this is going to have more teeth behind it versus having it as grant guidance. It's also going to mean the effective date. It's going to be when the government says it's effective, where you're not going to have that time agency to agency on when you can adopt it. So I think that's going to be the one big change I'm thinking about, is that you're not going to have that ramp up time that we have had historically.
Absolutely. So I guess the purpose of this proposal is really to increase oversight, monitoring, and accountability of people attending federal or receiving federal awards. So our presentation, at least covering the proposal side, we're going to cover 5 areas that we think are most significant to our clients, or at least that stood out to us. And then for each change, we're going to kind of explain what the change is, and then maybe some considerations to go with that change. So we kind of already touched on this with the discretionary funding. They're going to expand award termination authority. So you're going to have to, as a nonprofit leader, really monitor your revenue diversification as well as your concentration. And more recently, with those disruptions and cancellations, it did kind of prepare us for this change. So what strategic implications does this have? Well, when we saw the cancellations more recently, we really saw nonprofit leaders focus on 3 things. One was operating reserves. So we saw a lot of nonprofits either revisiting their reserve policies, or they might have even just increased the reserves. So just kind of putting that as a point of emphasis. And then revenue diversification was also another point of emphasis. We saw leaders working with their development teams to either increase their types of funding, increase their different types of funding sources, as well as different individuals providing funding. And then we also saw the budgeting process evolve quite a bit. So historically, a nonprofit would prepare their budget at the beginning of the year and track actual results against that throughout the year. We now saw some scenario planning built into the budgeting process, where you'd have your expected budget, but then you might have a worst case scenario where you're kind of planning for the worst. So that kind of prepared us for this change, where with some discretionary and uncertainty around the federal awards, we expect leaders to kind of focus on those 3 areas into the future as well. So while this change is still pending, I think this is a good opportunity for nonprofit leaders to kind of take an inventory of whether or not they are considering these different areas. So are you doing a grant portfolio review, determining whether or not you have concentrations, how dependent you are within 1 or 2 agencies? Does your organization do any scenario planning? If not, is that something that you should implement? Maybe the boards and management will start having those conversations. And then just revisiting diversification and concentrations. So another important revision within the proposal is expanding recipient and subrecipient monitoring. So this has a couple different elements to it. So one, they're gonna increase accountability. So they're gonna actually expect people, pass-throughs to actually do a little bit more follow-up on subrecipients. So if you give out a sub-award, you may have to confirm whether or not that sub-award is getting reported to SAM.gov. This section of the proposal also does want to increase the relationship of related parties. So currently, I think some organizations do kind of use federal awards as kind of an internal transfer where they receive the awards, but maybe a related party is carrying out the program. This provision is going to require you to do a subrecipient versus contractor analysis of even your related parties to make sure that you're not circumventing that determination and using a related party as an internal transfer. And then three, they're adding reputational considerations into the monitoring and risk assessment. So within your risk assessment of your subrecipients and your monitoring, there's going to be a reputational risk component. Still a little bit unclear of what that's going to look like, but if a pass-through entity does something that could jeopardize the reputation of the pass-through or the agency, there may be some discretion to take back some of those rewards. So that's still a little bit unclear, but it's going to be interesting to see how that folds out in the final revision.
Yeah, and just a couple of thoughts on that slide, Dave. I think with subrecipient monitoring, I think the big emphasis on documentation. You're going to hear us say documentation, documentation throughout this whole presentation. And from a risk assessment perspective, I think one of the pitfalls that we have seen in the past that they're certainly going to be needing more rigor around that risk assessment process and memorializing how did leadership determine who subrecipients should be. So whether it was a heat mapping exercise, I've seen some organizations go actually through it, heat mapping it, what are the risks, et cetera. And it's great that they're having these discussions with program leaders, with finance, et cetera. But memorialize it, document it, keep that in the file for if a regulator were to come in or for your auditors to see what that process was. So again, we're hearing there's going to be a requirement for more rigor around those risk assessment processes.
Thanks, Lisa. And that kind of just segues right into what operational considerations you have with this proposed change. And Lisa kind of alluded to this, subrecipient monitoring isn't just an accounting function. A lot of times you have program staff involved. So what should you be doing now? Make sure you're educating your whole team that's involved in the federal awards. Let them know that these changes are coming, that we may have to revisit our processes with subrecipients, and then going back through your documentation and really making sure that your process defines who's responsible for what. So we got our first polling question. Which statement best describes the relationship between 2 CFR Part 200 and the compliance supplement? A, the compliance supplement replaces 2 CFR. B, 2 CFR Part 200 contains the underlying federal award requirements, while the compliance supplement provides an annual single audit guidance. C, both documents are updated annually and contain the same requirements. Or D, 2 CFR Part 200 applies only to federal agencies. So we'll leave that open for a little while, kind of in the background.
Boy, this was a hard one, David. I needed a softball. Like, what are Lisa Lipsky's favorite digits? Like that would have been a good polling question. This
We
is
can't
hard.
see the poll anymore. The poll disappeared.
Nope, that's above my pay rate. I need help from my admin team. Can we re-show the polling question?
It's back.
Thank you. So give everyone a minute to answer those.
Okay, David, do you want to roll those results?
We only have 19 people that answered out of 63, so I'll give them another 30 seconds.
And yes, we'll be sharing our slides as a tool, as a resource. We don't expect everyone to memorize all this. And so after the session, we'll be sure to share our slides.
All right, so I guess, does admin want to close the poll soon and share the results? So the answer was B, two CFR Part 200 contains the underlying federal award requirements, while the compliance supplement provides annual single audit guidance.
Okay. Good, everybody. That was a tough one. Out of the gates. That was a tough one.
All right,
Okay.
so another provision that kind of stood out to us was the E-Verify requirements. So the E-Verify is an internet-based system within the Department of Homeland Security, and the proposal is going to require some e-verification of both employees and contractors. So I think a lot of people are familiar with the I-9 process. You're going to essentially take the information on the I-9, put that into this internet-based system to verify whether or not people are eligible to work in the United States. So this will be, and this is important because they actually included this in the control section of the proposal. So that means this isn't going to just be like a quick check or a quick task. There's going to have to be internal controls surrounding it. So you're going to have to retain documentation that it was done, retain documentation that it was approved. This is going to look kind of similar to what we see with suspension and debarment, where organizations are required to look up whether or not individuals are debarred from doing business with the federal government and then retaining those records in their files. This is going to be another separate step that's going to be required. So this is actually going to have what I think are pretty significant. We have a comment. Sorry. Yeah, so some people already do use E-Verify. So for those individuals, won't be a big change, but those that are not using it, it's gonna be time to revisit your policies and procedures. And I think this will have pretty big operational impacts just because there's going to be it's not just going to be a finance task, right? So it's going to involve employee onboarding. So your HR teams are going to have to be educated and your policies and procedures for onboarding are going to have to be updated. If you have an AP team or a procurement team that's dealing with contractor onboarding, you're going to have to implement that in that process as well and your vendor files. So this is going to kind of be a team effort and revisiting a lot of policies and procedures and adding these requirements in. So another revision that stuck out to us was the elimination of federal awards or fixed federal awards. Oh,
That's okay, David. We'll get to the questions.
okay. I apologize. Yeah,
No worries.
So the revision is going to eliminate fixed awards and go more to a cost-based model. So at least for my client base, there's not a lot of my clients do have the cost-based awards. So when they do get a fixed award, it does add some confusion sometimes whether or not it should go on the CFA or not. So at least for my client base, I think it will help kind of reduce that confusion. But if there are organizations that are reliant on these fixed awards or they're getting mostly fixed awards, I think it's going to add some administrative burden to those organizations because, cost tracking and reporting may be a little bit more administratively, more of an administrative task than milestone reporting. So for those organizations that are relying on the fixed awards, you're going to have to kind of do a revisit, make sure you have the documentation in place.
Okay, so here's my 2 cents, right? The fixed price contracts, it was always the quagmire, right? Because technically, they should not have been on your scheduled expenditures of federal awards, because it wasn't a cost reimbursement. It was the modality. It just didn't fit where the CFA goes. So there were clients that included it on the CFA, but it was below the schedule of expenditures line just to disclose that they did have fixed price contracts. It just lend itself to additional questions and flags. Was this truly a fixed price? Should the auditors have tested it? I got more questions from regulators about how did you determine? What did management do? So again, this is just Lisa Lipsky, is that just removing it altogether, eliminating it, I think will lessen any confusion or, overly complicating your scheduled expenditures of federal awards. Make sense, Dave?
Yeah, no, I totally agree, at least with my client base. And then the last revision that we wanted to kind of draw your attention to, I think Lisa already touched on that, is just a terminology change of moving from uniform guidance to uniform grants regulation. So we always said UG was a common acronym that we were using that might get now become UGR. And I think Lisa alluded to this, by making it a regulation, it's going to have government-wide implications and kind of have a consistent application. Now, when it was uniform guidance, it was still regulation. It was still codified. But I think by using the term guidance, there was a little bit of uncertainty. Is this required? Is this optional? By calling it a regulation, it's being explicitly, hey, this is regulation. It's government wide. So that's going to be a pretty big terminology change there. So overall, the proposal is trying to lead to more oversight, which is going to eventually result in more documentation, more responsibility of management. So kind of increase the work surrounding federal awards. And then before we move on to best practices, Lisa, do you want to kind of speak a little bit to what organizations should be doing now?
For sure. So if I'm a CFO, this is what I would do. This is how I would think about it and what I would start doing as soon as possible with my teams. I would use this proposal as a readiness checklist. Okay. Again, nothing's final, but being proactive in what could be coming down the road. So, step one, I would first start by doing an inventory or have somebody do an inventory of all direct, federal awards, pass-through, and sub-awards, having an understanding and an inventory of what does your CFA look like. I would then identify which awards rely on reimbursements, which ones are fixed amounts, or what those other funding structures could be affected. I would then assign some sort of responsibility for someone else to start monitoring these award terms. Someone in the program department start monitoring the award terms, agency guidance. If the agency is going to be communicating, you want someone to be, absolutely proactive on it, and then implementing the developments as they are starting to be rolled out. I would recommend just reviewing your current payment process. Again, evaluating what the impact could be on those funding, on those payment processes. Are you going to need to, again, expand, make it more of a protracted document to capture milestones, activities, to ensure that you're satisfying, that you won't have any interruption in your payment. I would also look to perhaps reassess your subrecipient and your contractor relationships, revisiting the classifications. I know that UG did a great job coming up with a checklist. Going back through that checklist, did the arrangements change? And making sure that you're updating these monitoring templates as needed. So again, being proactive with these potential changes. And these are all things that, let's say it doesn't happen. Well, you should still have all these compliance requirements documented, the policies and procedures, et cetera. So really revisiting that, and it won't be, I don't think it would be an exercise in futility if you take those steps. I would also look to, identify cost categories. As mentioned, there could be certain costs that require perhaps additional approval. And I believe that was advertising, membership, conferences, not that they're going to be unallowable, but they may require additional approval. And finally, starting to coordinate. I know with my clients, I'm going to be proactive and speaking with them. Let's huddle up. Let's get finance involved. Let's get procurement, HR. That's also important to get HR part of this discussion. So as much as we can front load the process, and when this does become, if it does become final, you'll be in a good position. Monitor, monitor, monitor the final rule. And I know I'll be talking to my clients as soon as I hear anything with regards to the effective date.
Thanks, Lisa. And before we move on to kind of some of those best practices that you alluded to, we did have a question.
Sure.
It was related to E-Verify. So would we have to go back and E-Verify everyone? Also, if this has not ever been done for contractors and consultants, what about non-staff board of directors for small nonprofits? So I would think when this gets implemented, you're going to want to create your policies and implement your policies to kind of do forward looking. But if you have awards and there's employees or contractors that are working on those, then you're going to want to implement and verify the E-Verify.
Yeah, and I think that's also important is, that checklist with subrecipients versus vendors and contractors. Just knowing that difference and how they're being classified will help with this step of it. And we're going to talk a little bit more about the differences between those two.
And then there was another question on the E-Verify, just discussing when you had work with international nonprofits. So I think we'll probably have to wait for the final regulations to see kind of what the final rulings are, to see what that's exactly going to look like. Because right now it's still a little bit preliminary, but we will have more information on that when it comes out. And then
Much guidance with regards to international when funding is given to international entities. So more to come on that front.
And then we also had one more question, Lisa. Do these regulations apply to federal funds received directly from the federal government, or do they also apply to federal funds received as pass-through from states?
Pass-through and subrecipients as well. So it will be all three. So it's important to know where, that's what I said, doing that inventory. Is it a direct recipient? Are you a subrecipient, et cetera? So this could impact, as you know, subrecipients must adhere to the same regulations, compliance requirements as those that are passing through those funds. So I can't imagine that they would, caveat it by saying, oh, subrecipients don't need to do that. No, pretty sure it'll flow through on who is receiving those federal fundings.
Great. And I think there was just one comment about sharing the recording, which I think admin will be able to do as well. So I think that covers our comments. We can move forward with some best practices.
So we've spoken a lot about documentation. You know, the mantra, I know my team knows this by heart. If it wasn't documented, it wasn't done. Well, there's going to be even more of the from a making sure that the clients have what is needed documented, and it's going to be let me take a step back. We need to dust off the accounting policies and procedures manual. Okay. I would say that's certainly step one. Dust them off and make sure that what is being executed is what's documented. Okay. Many times we go into situations and, we're looking at the process memos or the accounting policies, procedures, and that's not what's happening in reality. And then we look and we see little yellow post-it notes. Well, no, we changed that. This was changed. This was modified. Oh, after COVID, we streamlined this process. Okay. I get it. Let's go back and make sure that the process memos are consistent with what is actually happening in effect. Some of the areas will need more rigor, as I mentioned, the payment process, making sure that you're expanding on the milestones and the activities. For the documentation, there are times where when, I have my audit hat back on, took off my CFO hat, put on my audit hat. So my audit hat is when we are looking at, various transactions and we're not seeing documentation, we're not seeing sign-offs. Well, I have an email from someone in the program department. Is that good enough? No, it needs to be on the transaction. It needs to be on the invoice. Procurement, we get that a lot where for procurement, which is the bane of my existence because there's so many parts to procurement. But for procurement, when you are doing sole source and there's bidding, you need to retain that documentation. You need to retain what happened during that discussion. How did you determine that it was a sole source? Document, document, document. Going back and trying to pull emails or minutes or, well, I have a recording of that meeting. No, if a regulator were to come in, their position is, was it documented or not? And if it wasn't, it's a finding. Okay. So my job is to help you get this right. Document it, have it in one place. I would say if you start, let's start at the top. When you have the grant agreement, having a cover sheet, having that checklist, what are the compliance requirements? Have it all in one place and cross-reference it to the contract. That way you're sure of what the requirements are, what the control is, who's responsible for performing which control, and then documenting it. So I think that if as soon as we walk into a client and I see that checklist, Dave, right? Woo, we're happy because we know that they did their due diligence, they did their job to make sure that it was clear as anything. And again, not just your external auditors, regulators. If a regulator were to come in, that's what they would want to see. So documenting key controls. Key control. What's a key control? The key control around a compliance requirement is someone knows what's, for example, allowable. Is an allowable cost. Somebody went through the steps, they signed off on it. That is a control. Someone with the knowledge of the contract, right? That we can point to that person. They are knowledgeable of that contract and they know what costs are allowable. Also, retaining that documentation is also part of the testing. I know we're going to get into suspension and debarment on the next slide, perhaps. Suspension and debarment, part of procurement. The suspension and debarment requirement is you do a search. You do the search on sam.gov. Is this vendor suspended or debarred. Well, you did the check. Now, next step is screenshot it. Make sure you have evidence. You have evidence to show to your auditors that you did it. Oh, but that's not enough. Just because somebody did the screenshot, then you need someone to review it that the vendor is not suspended or debarred. So that's your key control, the review and evidencing that review with a sign off, with a date of when that was done. Next slide. Dave, I think we have another polling question if you want to
Yeah,
take this.
absolutely. What is one of the most significant strategic considerations introduced by the proposed changes? A, elimination of single audit requirement. B, greater uncertainty around continued federal funding based on agency priorities and federal interest. C, automatic increases to federal award amounts. And D, elimination of compliance requirements for nonprofit recipients. And the answers are coming in, but we'll give them another 30 seconds.
Oh, that's a little tricky, Dave. I want the audience to know this was not my work. This is yours. They're hard. But we have a smart group, so I'm sure they're nailing it.
All right, I think they closed the poll. The answer was B, greater uncertainty around continued federal funding based on agency priorities and federal interest. So I think 95% of everyone got that right. So great job, everybody.
Okay, so back to our slides. Okay, so this slide, I love this slide because it is. The single audit, I believe, is an open book test. And we all loved open book tests back in school, right? So what does that mean? It's an open book test. I would think as a CFO, your team already knows where the auditors are going to be focusing, what is going to be the major program. And I say that because we know what the numbers are. We know what the threshold is for single audit. We know what the number is for A's and B's. You pretty much know where we're going to be focusing. I would say make sure you start with your ALN, your assistance listing number, used to be CFDA. They changed that up on us. So ALN, identify the ALN, go back to your compliance requirement, your compliance supplement. This is what's going to tell you what are the applicable compliance requirements for this award, whether it's eligibility, whether it's equipment, procurement, etc. That's going to tell you where what the requirements are. Now, I get it. Auditors, we have a different calculation, I would say, to determine what's direct and material. We know it's direct if it shows up in the compliance supplement, but is it material? That's the question mark. But as a client, as an auditee, you should be complying with all of the applicable requirements in the supplement. And then compare that to your policies and procedures, your process memos, right? You want to make sure that, if it is eligibility, who is reviewing? What's the documentation to determine eligibility? Who's reviewing that documentation? And this can all be done well in advance of your audit. Next slide. The CFA, your schedule of expenditures of federal awards, obviously financial statement schedule, but this is really what drives the single audit. If this is wrong, I will tell you, it can sunk your audit, right? Because if the CFA doesn't have all the contracts listed correctly, we could be going down the road testing the wrong major program. Okay, so the CFA, you want to make sure that you've correctly identified all federal awards, that the ALN
Right.
is correct. You want to make sure that the ALN.
Yep, that's us. Thank you.
Okay, somebody please go on mute. You want to make sure that the ALN agrees to the contract and that the name is correct. So what's on your CFA, that the project name, the program name needs to be exactly the same as it is on the contract. Even one word can trip up the regulator. So make sure it's identical to what's on that grant award. The inclusion, oh, stay on that one for a second. The inclusion, to make sure you have all the awards tests included before the auditors come out, I would recommend someone review your CFA, sign off on the CFA, that the ALNs are correct, that it's complete and it's accurate. Because as auditors, I'm testing from a completeness and accuracy perspective. And as I said, it can really sink an audit if we picked the wrong major program because something was not labeled correctly, that it didn't have the correct ALN, or it didn't reflect all adjustments that had been made. So this is one hill that I will preach to the high heavens to make sure this schedule is correct. Next slide. Okay, we get questions from time to time because we do see reporting being a consistent finding, that a report was late, that a report wasn't filed, that your 425s, your 279s, your FAFATA, your program reports. I would suggest, again, recommendation is to have some sort of mechanism in place, have a calendar. Someone's responsible for this calendar, that when a new contract comes in, they're putting in the calendar when these various contracts reports are due. Again, this is a great way to control and to ensure you don't have any missed deadlines. And this is something I would share with the auditors. This will also help your auditors determine timeliness of the various reports. So I said we would spend a little bit of time on subrecipient and contractor. This continues to be a question that comes up. Is this particular entity, is it a contractor or is it a subrecipient? So let me break it down. So a subrecipient will help carry out programmatic portions of the project. You're going to have someone, another entity, perform part of the project. They're going to be making independent decisions, and you share in the accountability of meeting the goals. So that's in a nutshell, subrecipient. Now, contractor. Contractor, they provide goods or services for organizations within their normal business operations. They're not doing anything part of the program. They are not making any independent decision. Han Group, we are clearly a contractor. Our costs could be allowable for, we could get paid out of that pot. However, we are not a subrecipient. We are a contractor. So as I alluded to, there was a checklist that Uniform Guidance put out many, many years ago in the audit guides as well. Having that checklist, and you may not have a check in every single one of subrecipient or in contractor. So whichever one, again, it could be judgment, who is a subrecipient and who is a contractor. I will say in getting reviews by Inspector General, there we see more emphasis on subrecipients because that's where the monitoring comes in. So to classify it as a subrecipient and perhaps, well, maybe they could have been a contractor, I would err on subrecipient because of the monitoring. The feds would prefer to be, they want it classified correctly, don't get me wrong. But if you have the checklist and you have 5 in one and 4 in the other, I would probably talk to your auditor and lean more towards subrecipient just because of the additional monitoring that takes place. And I know we're running up on time. Common findings, I think we beat up a couple of these pretty good. Suspension and debarment, we still see that as a recurring finding where even though we do the search and they weren't suspended or debarred, if we can't see that someone else did that search and someone reviewed that evidence, it's a finding. It's a finding. Another finding is, we talked about procurement in terms of the analysis for sole source versus the bidding. Just make sure it's documented somewhere in the control file. We can't go back and talk to people or look at emails or minutes. Again, making sure that's documented. A question did come up about how often, when do you do that search? You do that search when you're entering into that procurement, when you're entering into that purchase order. I also heard from IG saying that your vendor list, if you do that on someone on an annual basis or a quarterly basis to make sure that no one on that list is suspended or debarred, it would be judicious of you to do so. Dave, is this our last? We have one
yeah,
more.
we do
Go
have
ahead.
a polling question. It seems like people are answering it, but what would the proposed E-Verify requirement primarily affect? A, investment management policies. B, employment and contractor eligibility verification for individuals working under federal awards. C, preparation of the CFA, or D, calculation of indirect cost rates. So we'll leave that open for a little bit, and then admin will close the poll. I'll skip to the next slide while we're closing that out. So we ended the poll. The answer was B, employment and contractor eligibility. 95% got that correct. So great job. And we should have one more polling question coming out shortly.
Okay. I'll get through these slides. So from a readiness perspective, before the auditors walk in, again, taking time to make sure your CFA is accurate, that it's complete, that ALNs are properly reflected. You want to make sure your process memos are up to date. So what's being executed upon aligns with those memos throughout the year. Again, retaining evidence of approvals, monitoring, reporting deadlines, and making updates as needed to your control policies. And before the audit starts, take a look at the compliance supplement, take a look at the applicable compliance requirements for each of the awards, and then also identify control or compliance gaps and sit down with your auditors, at interim. Which programs will you be testing? Just to make sure that we're in alignment is also very beneficial.
We got the
Last
fourth
one.
polling question. Which of the following is the strongest evidence that a compliance control actually operated? A, management states the review was performed. B, the organization historically has followed the same process. C, documentation showing the review or approval occurred, including who performed it and when, or D, the transaction appears reasonable. So I'll go to the last slide while people are answering that.
Okay, so key takeaways. Again, these are not final. This proposal is not yet final. Continue to monitor the progress and what the effective date is. Coordinate amongst your teammates with your auditors. Stay apprised of any federal agency rollouts or communications. And again, strengthening that documentation surrounding governance, strategy, planning, etc.
So we did, I think 100% got the last question right. Documentation should show who reviewed, approved, and when. Lisa, we also did get a question submitted in advance. It was, can religious nonprofits receive federal grants?
Sure thing. Sure thing. I see that with the religious orgs that I've audited, it would be like child nutrition clusters, but they certainly can get federal funding.
All right, doesn't look like we have any other questions, so we appreciate everyone for attending. Thank you so much for joining us.
Thanks, everybody.
Thanks, Dave. Thanks, Lisa.
And if you have any other questions, feel free to email me. I believe my contact information is in the materials.
And are you sharing the presentation to everybody who registered?
We sure are.
Okay, great. Thank you. Thanks for the presentation.
Thank you. Thanks for joining, everybody.